Hey traders, this is Chris Pulver here. Welcome to the Weekly Outlook. May the 4th be with you. This is the Weekly Outlook for stocks, forex, cryptos, May the 4th through May the 8th. Let's talk about the upcoming week. I will give you some of my best opportunities, whether it is in forex or looking for stocks indices. Are we in sell and may go away territory as we saw Friday, May 1st? Start to kind of preview that potential sell-off. We have some bankruptcies that I've been reading about retail-wise. So J.Crew filed for bankruptcy over the weekend. We have airlines that are being dropped by Warren Buffett and Berkshire Hathaway. So I think that this is the reality that we were talking about, which is why I don't think May is going to be a super optimistic month. It might be a very volatile month. We may not turn the corner, but again, we're going to look at the technicals and make sure we make good, clean decisions. Cryptos actually have had a decent run last week. It's an important earnings week. Monday, we have earnings from Ferrari and Tyson Foods. Tyson Food actually announced that their supply chains have been dramatically disrupted due to coronavirus. So it's going to be an interesting earnings week. Tuesday, we have Disney, Pinterest, Beyond Meat, Virgin Galactic, Chrysler, Activision, Etsy, Zynga, New York Times. Wednesday, Lyft, PayPal, Shopify, and Peloton. So again, we're in the bulk of earnings season, which is why May is going to be such a critical month. A lot of technicals on the Forex market kind of reflecting this indecision. We're still in those indecision territories in the S&P 500 that I've been talking about the last 2 or 3 weeks. That's kind of where I'm looking for clarity outside of that. I mean, I want the either bears to break below or the bulls to break above, even though if the bulls are breaking above, I'm cautiously bullish. If the bears are breaking below, then you'll see how I'm looking to take advantage of that between Japanese yen pairs, dollar strength, and probably the Swiss franc as well. But one of my favorite setups for this week and the next couple weeks is actually the Euro Swiss. So I'll talk about that first. Let's go ahead and dive into it. One thing I also thought was interesting, this is the daily percent change in the stock market for the Dow Jones Industrial Average. Look at this over the last 10, 11 trading days. Just violent swings. It may not have come with the same volatility we saw back in March, but we clearly are seeing some massive indecision, whether it's good days or bad days. Now, for the most part, April was a positive month. In fact, for the U.S. markets, April was one of the best months that we have had since 1987. But you're also taking one of the best months with one of the wildest conditions we've seen in the markets in, easily the same time, 20, 30, 40 years. You have, stimulus packages rolled out, survival packages rolled out from the U.S., from Europe, from all over the world. You've got lockdown measures. You have all these crazy things going on with fiscal policy, social policy, right, with lockdowns and quarantines and whatnot. So the question is, will the markets find their grounds? Whether that is, momentum to the downside or momentum to the upside, will the fourth or the force be with the markets this week? Let's find out. All right, let's get into the stock market here. Okay. So let's take a look at stocks. So here is where our futures market sits for the morning. We are flat on the day. We have a monthly pivot just a little bit lower. Take a look at this again, the big swing from high to low. We're kind of creating all this magic around this 5.0 and 618 zone, which happens to be right in here. So the 50 to 60% zone where price continues to stay indecisive. I drew this up also on the S&P 500, which is right here. So we're not breaking above or below. You can see that was a bit of a false breakout last week. You look at the SPY, same thing. We had a false breakout above. We're back into this range. In my opinion, below this 50% level or closing below this low from April 20th, if the bears take out that low, then I think that is where the real bear territory and confirmation starts to materialize. So we might see a lot of back and forth movement. We might see a lot of indecision, which means right now we need to be patient. We need to scale back our trade sizes. There's no real clear direction. There's no real sure things right now. But if we get confirmation here, that's where I'm looking to pick up that momentum and trade stocks accordingly by either waiting, and I'll be a bargain shopper at March lows or lower, or take advantage of the short-term opportunities with an increase in the volatility index. You can look at inverse ETFs. You can sell the stock market. So that's ways to play it in the currency world. If we start to drift into this territory, it's the Japanese yen. That's really my play. This will be JPY strength. If we start to see that bearish confirmation, I'm looking for JPY strength. And on that note, I actually do have a prediction available. If anybody is interested, there is a way that you can get your hands on this inside of smarttrader.com. I am actually posting a workspace dedicated to my Japanese yen prediction. So let me go ahead and take a quick peek at that. And here it is. I sent a video out last week to my trading room, the Flex trading room, and I wanted to kind of highlight some of the patterns that we are seeing in the stock market, which is a 10, 11-year bull run and expansionary cycle, to the complacency and the greed that we saw back in August of last year into February of this year, where we had the new high in February. Then we had our major catalyst, our major disruption, coronavirus, aggressive shift in monetary policy, deleveraging. And so I think what we're seeing right now is the bull trap. April was a fantastic month, but I think what it really gave smart money the chance to do was get the heck out of their positions, to possibly balance, maybe take some short-term gains, to offset what was faced in March, which was an ugly quarter for most. And then the future possibly holds, the recession, possibly holds the trouble ahead as, unemployment for the U.S. is possibly going into double digits. We were at 3.5% over the last decade plus. We got it all the way down to like 3.5 or 3.4%. And I think this week they're talking about 12 to 16% of actual real unemployment. Not to mention that unemployment claims have skyrocketed to the tune of 25 to 30 million. And we've wiped out a decade worth of growth in about 4 to 5 weeks. So this is the type of move that it's taken a decade to set it up. And we have our catalyst in from March. We have our kind of balanced and aggressive move in April. But I think the reality is near. So taking a look at the S&P 500, you can see the same thing. Look at our shift from bearish to our little retracement. Look at the S&P 500, our bearish move, our April recovery. So I think that the future possibly looks something like this. Now, we might be dealing with the indecision here, but once our momentum starts to pick up, I think we come back and retest those lows. At the very least, this still, at the end of the day, is a technical pattern, and we could be looking at that broadening formation, where, yes, it's not perfect at the top and it's not perfect at the bottom. But to come back in and retest these lows is warranted. So that's where I'm looking at this current indecision. If we break those lows from the bears, then I'm looking for those March lows to be retested to at least the lows, possibly another 5 to 10% lower low. Then we start to see the technical recovery from there. And again, it may not be immediate. Obviously, investors are wondering, are we going to have another sharp V bottom? Or will this be the lows get retested and then it takes a while to carve out those lows? And that's kind of the reality of how on earth are we getting out of this. So this is where we're currently at. This is where I think we're going, and I'm ready to position myself accordingly. So with the Japanese yen just in the near term, I'm looking for Aussie yen to come back in and retest the March lows. The Cad yen, same thing. The euro yen breaking below 116. We have a giant channel and a round number back to 2016 lows and channel lows, which puts us around 111 to 110, another 600 pip move. Pound yen, one of my favorite looking patterns right now. If we break below 132, this should be sliding to 125. That's 700 pips. New Zealand yen, a bit of a rising wedge. Lots of past support becoming future resistance around 6650 to 6700. From there, we drop back to retest the March lows. Dollar yen is below the 107 handle. It's not really moving too much. We're sitting around 106.60, 106.70. But if we break and stay and hold below that 107 handle, I think we're coming back to at least 105. But we revisit the March lows, that puts us around 101. We also have a round number lingering at 100. So that workspace is available inside of Smart Trader for anyone that is a Market Trader's student or client. You can email your educational specialist and get that workspace. Come into any of our webinars or sign up for some of our webinars and also ask about our prediction. This is my 2020 JPY prediction. So using the keyword like that, you get your hands on the workspace and get involved with how we can take advantage of it. All right, so I want to spend some time here in the currency world. So stock market wise, we know the game plan. We're still looking for our bearish confirmation. We are kind of back in the no trade zone. The bears have to close below that April 20th low. If we close below that April 20 low and get outside of this level, I am looking to short the stock market, buy inverse ETFs. I want to look and see how I can play the volatility index as well. But the VIX really just comes back into possibly 50. We're currently trading around 39.5 on the VIX. We might have this come back into 50. Obviously, that would be an increase in volatility. But the big key for me is, do we break like we did back in March? Do we break above 50 and then soar back up to those highs around 80 to 85? Or do we just return to 50 and then back down to 30? Do we return to 50, back down to 30? Where we have increased heightened volatility, but not the panic and fear-driven selling that we saw back in March. 50 is going to be the critical number there. But again, this is still heightened volatility. If we go from current levels at 39.5 to 50, then there's going to be some increases in volatility. There's going to be some more panic and selling setting in. There's going to be the kind of harsh reality of unemployment and earnings being poor for this quarter. And I think that's kind of what's being expected. Of course, I'm also seeing that not much has been priced in. I think what is being priced in is the optimism. I think the optimism of, countries getting back to some type of normal, I think the optimism of getting testing around and the hopes of a potential vaccine, which is in reality probably 12 to 18 months out from number one producing it to let alone worldwide distribution. So, yes, April's had a great recovery. It's a great balance, but I think the reality is May looks a little gloomy. We have earnings coming up that will most likely disappoint, and if that disappointment is starting to get priced in along with unemployment, we will see probably the stock market play out as I'm expecting. So the most important thing here, traders, is that we are prepared for this. And not just prepared, but also poised to take advantage of this, because there will be movement. There will be stocks to capitalize on this. There will be instruments to trade, options to trade, inverse ETFs to trade. There will be currencies to see what's reflected with the sentiment of the market. And that is why we are here. That is why we are traders. And that's why I do these weekly outlooks. So I'm going to start with this currency pair right here, the Euro Swiss. Now, this actually is a strictly technical setup. We're currently trading around 105.36. The Euro Swiss said lows around 105, 104.90. Technically speaking, this goes with one of my systems here called Right Trader. And if I go to my daily time frame, we have not touched this shaded zone in quite a while. And the last time I saw this extreme was back in 2017. And you can see how that played out. So this was the last time that we had a gap, which was created in April 2017. We ended up stretching over 280 bars before it was actually hit. But my favorite part is not just noticing when it was hit, but when did it start reversing? You see where we started forming tops here around 250 bars? This was 255 bars before the tops were forming, which happened to be a nice technical resistance at 1.20, which is a huge number for this Euro Swiss. Formed some resistance at 1.20 and dropped. So yes, we did hit my shaded zone at 280 bars. We dropped lower than that. We also, if you can see here, we created a nice bearish pattern that has continued the trend to present day. Now, I'm also looking at that as a repeat. We now have a bar count from May 13th, 2019. We are going to stretch an entire year. It's 250 bars. Okay, we're at like 250 to 252 right now, currently. So if we start forming highs like we did back here around 255 to 260, and then we found the shaded zone around 280, I would say within the next 20 to 30 days, we start to see a more promising upward movement on this Euro Swiss. So from a technical standpoint, if I zoom in, I've been telling traders this in my room, all we need to see here is a blue candle. If that blue candle appears, that blue candle confirms, then we're looking for this run into the shaded zone. It is about 200 pips. About 200 pips. Now, I'm going to be pretty aggressive on that 200 pips. This to me is it's a great trade. Again, it's a technical trade, which more often than not in the Forex market, technicals end up being the reality, while traders find out afterwards from the news why it actually happened. So we want to be ready and prepared with the technicals, look for that confirmation, and then trade it as we see it. Again, previous support as well, back around 108. So I think an easy spot is get this thing to go bullish and confirm for us. Trade this aggressively towards 108. There's two things I'm looking for. Either this goes aggressively to 108, we then have a pullback and a push higher into 110, or we see a movement up here, turning blue and confirming, pulling back, and then going into that 108 support. So profit levels for me, target 1 is 108, target 2 is back to 110 and 110.50. All right, so again, we talk about that every single day in my trading room, but I think this is a great trade to kind of start things out with and have it on the watch list for something for a pretty solid 200 pips of movement once we have some confirmation. That Euro Swiss is also going to be played out like a little position trade for me in the month of May. If it becomes a nice little, 2 to 3% profit, I'll be super excited about that. And this is what I'm going to do. I'm just going to play it out with bullish confirmation, be aggressive towards 108. And if it proves to be, 108 is kind of the first wave, we get a pullback and another push into 110, all the better for me to add to a dip, add on pullbacks, and get it up towards 110. Let's go into some other currency pairs. So the yen, what am I talking about on the yen? So we broke this trend line. I want to see the daily candle closing below these levels back here in April. So if we stay bearish, which you can see right now, we have broken this trend line pretty nicely from last Friday's close, actually. It's a pretty straightforward setup. We just have a nice trend line break, and I want to see if the bears will hold that. So a trend line break, possibly a retest to fail at that high. So we see a high to low, lower high, and then a lower low that pushes this in below these levels, and this opens up the bearish momentum to the downside, which opens up a trend to continue to that downside to retest those March lows. So that is Aussie yen. You can see CAD yen similar. Again, I'm kind of repeating what I talked about here, but get ready for that prediction stuff, right? This is Friday's close from last week. You can see, again, fairly bearish. Right now, the CAD yen is not exactly where I'd want to be selling, but if we see a break lower, let me use a straight line here. If we see a break lower, then yeah, let's go ahead and trade that down. I would prefer that we see this range-bound trade play out, that we can possibly sell it higher. So if we have resistance around 77.00 on the CAD yen, then yes, we could sell that down to around 75.50. My target here, those March lows around 74. Could we go lower on the CAD yen? Yes, I don't have to stop there. Okay, there's nothing that we have to stop the CAD yen to the downside. If we go to a weekly chart, if we look back further, this goes back to 2008, 2009, you can see that we have certainly been lower. So I'm just looking at conservative levels. We can definitely get lower than the March lows. And from 2008, 2009 lows, that puts the CAD yen down to around 71. So we can get there from trading currently around 75. But again, major resistance at 77. If we find a way to get back to 77, I would love that trade. 77, look for indecision or look for opportunities to short on a smaller time frame, short it back down and try to get to March lows target 1, 2008, 2009 lows target 2. And again, look for that trend to continue. Aussie CAD and Aussie pairs. What was I saying last week? If you watched my weekly outlook last week, I said this is a week to protect your profits and then expect to see some Aussie weakness. And that's exactly what we saw. So coming into last week, we had Aussie strength going into Monday, Tuesday, Wednesday. Heavy sell-off on the Aussie Thursday, Friday. Now, this doesn't look like a lot, but across the board, we probably saw anywhere from 2 to 500 pips respectively on some of these Aussie pairs as far as weakness. Now, if you saw the Aussie basket, I had a lot of traders last week in my room that by protecting profits Tuesday, Wednesday, they were starting to take some short positions, and boom, Thursday, Friday paid out really nicely. So I ended up making about 100 pips or so on the Aussie CAD with 2 positions. I took all my profit on the Aussie New Zealand, which has been, kind of my swan song for 2020. Super happy that I took profit there right at the top. It was a high of, let me see exactly where the high was. High was 107.49. I closed all of my positions. I had about 18 positions running. I closed them at 107.48. So really happy with that exit. And what I hope happens here is that there's a little bit more weakness to come, or not even weakness, just balancing. Let's see if this can just make its way back down into 105 or 104 or 103. Let's look for then some support to build itself back up, and then we have another chance to go long on the Aussie New Zealand. So we'll continue to dissect this trade and take some good profits on it. But good work and great commitment from everyone that was involved in that trade, and I hope it paid out really nicely for you. Let's see here. Aussie CAD, Aussie Swiss. Again, taking profit. So going into last week, taking profit, protecting profit. We might still see it get back up into these levels. We might see some more indecision here on the Aussie Swiss, just like we're talking about in the stock market. This is a risk-on currency pair with the Aussie versus a risk-off currency pair with the Swiss. So it will be interesting to see how this plays out. If this continues to have a low, slightly higher low, then this could be that reversal pattern that's setting up that we end up getting that move later on. So I'm kind of done with the Aussie Swiss to the upside at this point. What I'm interested in now is if we get up, if we have a lower high, then we're going to end up seeing a sell-off trade. Aussie yen looks prime for that. Aussie Swiss might be prime for that as well. If we see the Aussie Swiss come back to slightly higher highs, I think this level, again, you're seeing higher highs in price, but we'll probably end up noticing lower highs in momentum. That disagreement, to me, would set up a sell trade. So I would be looking for that divergence to set in on the Aussie Swiss. Aussie yen, same thing. Let's see, Aussie New Zealand we did, Aussie yen we did, Aussie dollar, taking your profit, protecting your profit, 65. This is actually perfect. Right back to previous lows, around 6,600. We had previous highs around 6,550. So we came right back into that big March breakout, came back and rebalanced it perfectly. So could we come back up one more time? Yeah, we could come back up to this level here. We have a high in price. If that is disagreement with momentum, more than likely this heavy level of support, which is around 6,600 to 6,650, becomes resistance, and this sells back off. So I think that this kind of risk-off mood might be coming. If that's the case, look for Aussie, and maybe this is the plan. Maybe it's Aussie weakness, more so than it is dollar strength, yen strength, or Swiss franc strength. It might just be Aussie weakness, New Zealand weakness like it was back in March. I mean, that was heavy Aussie weakness, but it was because it was a risk-off trade. So we'll see what happens. But I think this 6,600 level, or if we get back up to last week's highs, I'm looking to kind of fade that move back down. Major support around 6,250. If we end up going all the way back down, round number at 6,000, or March lows, potentially in discussion here for 5,600. Okay, Cad Swiss. Cad Swiss had a bit of a WTF moment last week on Thursday and Friday. I'm still looking long, and I'm staying long on the Cad Swiss. That's my bullish head and shoulders pattern. We broke the neckline. We got to new highs. Let me actually see something really quickly. I think we may have had some symmetry hit, which may have been why we sparked that move to the downside. So this low to high is around 329 pips. This higher low to higher high is around 300 pips. So we actually didn't quite hit symmetry. That's okay. But I don't know. So it was a kind of WTF moment, like I said, because in 2 days, it wiped away what was created in about 7 days of gain. So we had from this low to this high, took about 7 days, and then in 2 days just reset everything. Now I'm still looking at levels at 71 and upwards of 71.50. That's my profit level. So I'm going to remain long on this Cad Swiss for right now. And hopefully this is nothing more than a bit of a noisy head and shoulders where we're kind of now stumbling along the neckline. But the important thing is, can we stay above 69? If we stay above 6,900, then we'll get back to 7. If we can stay above 69, we can complete this pattern and head up to 71 to 71.50. So I do remain long on the Cad Swiss. If the Swiss remains neutral and oil can recover back into the $25, $30 mark, and that helps lift the Cad a little bit, then sure, this trade will be just fine. But it was a weird sell-off on Thursday, Friday for really no reason. I mean, not a lot of news, not a lot of trading other than just the Cad got super weak on Thursday and Friday. All right, meanwhile, oil opens with some pretty impressive gaps to the upside. So I had some alerts go off last night. Take a look at U.S. oil. Currently trading at $22.50. I'm looking at a monthly pivot around $30 and our big gap from Russia, Saudi Arabia news over the weekend in April. Or actually, that was in March, around $35. So could we drift up into $25, $30 this week on oil? Possibly. How's that helping some of these ETFs like USO? USO, as Wall Street is opening, we're currently trading at 1891 on USO, and UCO trading around 1414 with gaps, with kind of the technical picture as well. But you can clearly see that it's not receiving the same accolades from U.S. oil. So U.S. oil is making a run up, but UCO USO is not. Again, those are ETFs that are pricing in futures contracts, and like we saw back in May contracts, these May contracts essentially expired worthless, which is why you see USO as low as it is and UCO as low as it is. So I do have some small positions in UCO and USO, but I'm not holding my breath for big gains on that. I'm really just kind of trying to manage my way through to a respectable maybe 10-20% position or so versus looking to double and have a big gain. I'm just not expecting that because there are futures contracts in. There's the decay that's factored in. So I could really just be sitting and losing the longer I hold this. All right, so we'll see what happens on those. But I'm watching oil, I mean, as we should. And then same thing with gold and silver. So here is silver hanging out around 15. It's a 1480 right now with some indecision between 1580 and 1480. So about $1 worth of indecision on silver. And then gold continues to kind of push this 1750 boundary. I would be careful about being long gold at current prices. If you are long gold from 1200, 1300, fantastic. Sit in the money and see if this thing just blows off the highs. But from this level, you can see here that if we're going to make equal highs, but we're going to disagree with that momentum, there may be a correction coming back into this area. We might have range-bound trading from highs around 1750 to the yearly pivot, which is sitting around 1450. So we might be looking at more of a range trade from resistance at 1750 to support around 1450 on gold. But we know that, yes, gold can be irrational. Gold can do some crazy things, and it may blow the high off here at 17 and then just run from 1750 to possibly 2000. What's going to cause that? Higher volatility index and a big sell-off in the stock market. So a lot of the technicals that I'm looking at are supporting, my prediction, if you will, for a weaker stock market and higher volatility and possibly some risk-off flows in the currency markets. All right, let's go back into the currency markets here. So Cad Swiss, again, kind of range bound right now. I wouldn't be surprised, and I've said this before, we might just retest these lows. We might retest these lows. It may have been a disruptive enough movement last week for 2 days that if we get back above 6,900, then fine. Maybe a breath of fresh air gets resuscitated in this. We come back to 70, possibly 7,100, and I will definitely be taking profit. But if we start to see this level broken to the downside, then we're coming back into these lows around 6,600. I'm still a buyer, and I'll still hold it, but I want to get this thing back up into 7,000 plus for profit. All right, CAD Yen, we did. Euro Aussie. This is part of that protect your profits last week, and look at what the Aussie did in 2 days. This was a turning point. We had lows around 65.30, and we turned and responded to highs at 71. We had a 600 pip move in 2 days on the Euro Aussie. And again, that was after 1,000 plus pips of selling and sell zones and trends to a 2-day just massive move in short term. But traders were protecting, and then traders were long on Wednesday, Thursday, Friday of last week. So a nice little run on that Euro Aussie to the upside. Euro CAD is the opposite of the Cad Swiss, so it moved aggressively north, but hitting major resistance once again at 5,400. So I still think that resistance is solid there. The Euro Swiss I discussed, if we get a nice close above 10600, that is the critical spot. We need to get a nice daily candle above 106. Euro Pound, we're going to leave that one alone. Euro Yen, this is part of my prediction. If we see this steady move back down below 116, I will continue to be a seller. There's also a lot of channel resistance. Channel resistance here, channel resistance here. We might end up finding this around possibly 120. If we come up to 120, this was a move off the ECB last week. The European Central Bank held rates the same at 0%. There was some short-term flows on the day, which provided some euro strength. We still see the euro dollar in range between 108 and 110. We tested those lows. We tested those highs, probably because traders have sells, right? They have pending sells below 108. They have pending buys above 110. So what's the market do? Spikes down to fill those sell levels and stop them out. Spikes up to fill those buy levels and stop them out. So it's still range bound. So if the euro yen, number one, we want to see the yen getting stronger. If the yen gets stronger, this should be clearly below 116 and we fall down towards 110. I will be short on the euro yen if that's the case. Euro New Zealand, this was similar to the euro Aussie. Expected this to pop to the upside, and it did. So we had a low turning point here. Looks like around low 76.50, and we spiked all the way back up towards 8,100. So another 500 to 600 bit move in the short term on Euro New Zealand. So if I go into a smaller time frame, you can see how we had this planned out. We had some range bound trading to sell highs and buy lows, and then we saw a little bit of a fake out. I was telling traders, look, don't be suckered into trading this short. Okay, pay attention. If you get a break, retest, go, make sure you're moving stops to break even, protecting profit. And then we saw that big Thursday, Friday reversal. So we're probably still in some range-bound trades. And that's one thing to keep in mind. April trends, May trends. A lot of times what we establish is the range going into the summer. So we might see, the trend from March and April to starting to establish a range for June and July. All right, so I'm prepared to kind of, look forward into some of those range-bound levels, but for right now, this could be resistance at 8,250 to 8,300 with support around 75, 7,600. But we'll probably get some short-term opportunities on pairs like, Euro Aussie, Euro New Zealand this week, and Pound Ozzy, Pound New Zealand as well. Here's the Euro Dollar. Euro Dollar still range-bound. I had this, in fact, blocked in on these blue levels, 110. You can see that we spiked above. For everyone that had buy stops above 110, they got filled. Now they're stopped out. Everyone that had stop sells below 108, they got filled. They got stopped out. If you look at the daily chart, you're going to notice here that the candles are not closing above or below, right? Not a convincing bearish break, not a convincing bullish break. This is easy end-of-day confirmation to avoid getting stopped out or avoid getting faked out into the trade. Don't trade this euro dollar unless you are range bound, right? This is a range bound trade from 110 to 108. Eventually this will break. Eventually this breaks the highs and we go to 115 again, or we break the lows and we go back down to possibly 106.50 or lows from 2014-15, which is around 105. But this euro dollar will go somewhere else. It's just a matter of when and again, look for confirmation above or below, then we can trade it. Otherwise, either trade the range or stay out of it. Pound Ozzy. Pound Ozzy. We had 9 or 10 days in a row to protect our profit. We had our break of the channel, break of our trend line here. This actually happened to be a really nice, 2-day correction, but 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row, all bearish. As traders were short, either getting system shorts right here, turning that trend into our trades to the downside, getting some sell trades below this support, which is around trying to think, the low here was around 95.50, 9,600. We ended up going to lows to 9,000. So then that's a 600 pip move. Lots of profit at the downside, protecting your profit going into last week, Monday, Tuesday, Wednesday, moving those stop losses, trapping those profits. Boom. There's your big Thursday, Friday pop. Now, this is a currency pair that I think we might have moving back up one more time into this area, and then we look for a short. So there might be some short-term bullishness to remain on this Pound Aussie. But one thing to keep an eye out for is that was previous support. This could be resistance. So I'm watching this area really carefully. If this ends up forming some resistance and divergence, then I am a seller once again on the Pound Aussie. If you look at this on the higher time frame, this has finally broken a really nice channel that should open up some bearishness to the downside. So the structure was put in with all of this resistance here. If we have a high, low, lower high, lower low, that's all I'm looking for on the Pound Aussie. So I'm trying to get that short opportunity at the best possible price, something between like 9,600 and 9,800. I'm going to look to start shorting the Pound Aussie. Pound Cad, I'm going to leave this one alone. Pound Aussie has been good. Euro Aussie's been great. Pound Cad has been a mess. All these little levels for short-term trading, but you can see we're not into any open space. So more than likely at this time, range-bound trading from highs around 77 to lows around 72. So I wish that was the weather forecast here for Michigan, but it's not there yet. But look for the ranges between 77 and 72 to trade. So how do I play that? You sell it high, make sure price doesn't close above. Take your profit protected into those lows. You can buy those lows. As long as we don't break that open space, you're buying low, selling high. This yellow box to me represents the big trend where we would get back and retest the lows around 66. That's where I would deploy trend systems for open space trading. Otherwise, it's just sell high, buy low in the range right now. Pound Swiss, this one is also in a pretty tight range. So traders that were short last week actually had this one pay out beautifully. A lot of traders shorted this Pound Swiss with me at 21.50, and then we had pushing down to 2.0 or 1.20. That's 150 pips. So highs around 21.50, lows around 19.50. It's about a 200 pip channel right now, but again, very solid daily candle on Friday, which allowed this one to come into profit. So traders are locking up profit on Friday. Pound Yen. Pound Yen also part of my prediction. We have a continuation pattern that looks pretty promising, and that is a bear pattern. It's called a bear crown. So there's your March slide. Here's your April recovery. And then we have our left tip, center tip, right tip. To me, that's a continuation pattern. As long as we don't invalidate this high, we should be pushing down below 132 and then heading into those March levels. Now, conservatively, we actually have harmonic targets right there from a larger pattern on a larger time frame, which gets us into, conservatively, round numbers 130. So if we short it from 132, target 130, that's a nice safe play. I think there's more momentum to the downside. I think there's a bigger channel to the downside. I think this could be a trade that gets us down into the March lows and possibly lower. 123, 122, possibly the round number at 120. It can certainly go there. But how do you start this trade? We want price to confirm below 132 and then trade it to the best of our ability as low as it wants to go. That's Pound Yen. Okay, Pound New Zealand. Similar to Pound Aussie, but more range-bound trading. This one was a little bit uglier last week. It's still, kind of heavy resistance here around 2.10, heavy support around 2.01, which is about a 900 pip level. Now, it does appear from this equal high, we have moved down into this area, possibly coming back into intermediate resistance around 2.06, 2.07. We may get back up into 2.01 again. I will look for shorting opportunities at 2.10. And stops above that. If we have a lower high around 2.07, then this is a swing 2.07. Look to complete this move into 2.01. So this week we're either going to 2.01 or we make the move up to 2.10. Again, that's short term, and then we'll look to short it at a nice high price around 2.10. Pound dollar. I'm currently short on the pound dollar. This one started to get back and materialize to our liking. Again, you can see this pattern. It's not quite the same as the Pound Yen, but it looks like a head and shoulders pattern. which is a continuation off this March structure. So March slide, here's a continuation pattern for this to come back into conservatively some harmonic levels, possibly even deeper back into these March lows. So I am currently short on the pound US dollar. New Zealand CAD. It's like the Seinfeld trade. It's the trade that does nothing. So this has been doing nothing, and so I actually put on one of my systems that trades ranges, and it's actually made me about 100 pips in the last week or so, and it's going to continue to do that. Anyone that's been trading this over the last maybe month or two has probably been hammering this trade for 30 pip gains here and there, 50 pip gains here and there, and I just have had this one running for a while. But the New Zealand CAD has been kind of an all-star with just intermediate choppy 50 to 100 pip levels from resistance to support. And again, this will break eventually, but for right now, I'm certainly taking advantage of this choppiness. If this choppiness continues, I will take full advantage of selling high, buying low, taking little 30 to 50 pip profits as much as I possibly can, and then I'll assess and I'll figure it out when it's going to move somewhere else. But it's also in a big channel. We have major resistance up here, major support down here. So directionally, it doesn't really matter where this goes. I've been talking about this for the last couple of weeks as I want to see it get up into 88, 8,900. But if we're going to do it in a super slow fashion like this, fine. I'll just have something range bound that trades every 30 pips or so, and buy low, take 30 pips, sell high, take 30 pips. I have a system like that called the Perfect Storm. That is awesome. So that's what I've got running on the New Zealand CAD for now, and we're just in a big range anyway. So it's pretty much just a range bound pair to take some range bound profits. New Zealand Swiss. Again, trendline resistance was hit. 2-day sell-off on Thursday, Friday last week. A big kind of critical stage is we either hold 5,800. We spend enough time here on the right side of the trend line to get another push into 62. If we have this turning lower, then the lows of March are back into the picture. How do we get there? Well, I would say if we close below 58, if we close below 5,800, then yes, that brings in the lows again to 5,400. That would be risk off. Look for the yen to get stronger, the Swiss to get stronger. Expect the Aussie and the New Zealand to get very weak if that's the case. So I'm watching 5,800 support. I mean, if it holds support, then we hold support. If we hold that level and we get on the right-hand side of this blue trend line, we should be going to 62. If we break that support, break below 5,800, we're probably heading off into risk-off territory, which gets us into the lows in March around 5,400. New Zealand yen, also part of the JPY prediction. If we close below 63.80, I'm looking to get very bearish. I'm looking to actually deploy a nice trend system to do that. It's going to be a critical spot. We might see range-bound trading for now as the stock market remains in indecision. What I may do if we see more obvious range-bound trading, then I'll likely have a sell system deploying at resistance up here, say around 6,600. Otherwise, if we break below 63.80, then that to me is confirmation to start looking for lower highs and lower lows, get back into the March lows around 60. But if we have a chance to sell it high, that's great. We'll fill this gap, which we're just shy of doing. We'll come back to this previous support becoming resistance right around 6,700. And I'll look to still sell it only with that being resistance. So we're either going to get a chance to sell it higher if we stay range bound, sell it at 6,700, or we're going to see confirmation below 63.80, and then we'll sell it. But I'm biased to the downside on the New Zealand yen. New Zealand US dollar. New Zealand US dollar hasn't broken any major, bearish structure yet, but we have previous lows. We might have one more push here. This does kind of bring in a potential rising wedge. There's major support around 62, major support at 62, which means that is a good point for potential and strong resistance. So I could see, if we don't break below these levels, if we don't break into new lows, then this stays kind of choppy here, but look for 6,200 to probably provide some resistance, and that is a sell high, trade to the lows, which is at 56. That's a big trade. It's 600 pips of movement. Could be a pretty solid trade with very little risk. There's your stop area. There's your profit, right? If it just keeps going up here, if the bulls aggressively close higher, then sure, there's a reversal. But I don't think we're coming into that just quite yet. That would all depend on the US dollar, in my opinion. Okay, dollar CAD. Dollar CAD, we flipped this one around. We had a couple of scenarios play out. We wanted to short the dollar CAD off of the highs at 42.50. So here's what the plan was. We had a trend line break. We wanted to sell it at the highs. We never got filled on that trade. Now, I did have traders that shorted in here around 4,100 and took it down to the lows. We had lows around 38.50. So great job taking that trade. It wasn't where I wanted to sell it, but it was a participation trade with a nice bear flag. So it did work out nicely. Then we turned around and we decided to buy the dollar CAD, and we took some profit last week. So we did not get filled at the top to sell. We didn't get filled at the bottom to buy, but we participated in that trade. I ended up closing for 150 pips yesterday, or last week on Thursday, Friday for the dollar CAD, and I'm still expecting this to head a little bit higher. So this may be drifting up into the same highs, which is around 42.50. And I'll turn this around again. If we get to 42, take your profit, protect your profit, and from there, look for resistance, and then we'll sell that again. All right, so as long as this remains range bound, if price doesn't break above 42.50, I'm a seller. And if price doesn't break below 38.50, that's a buy bounce. So we have pretty clear resistance and support on the dollar CAD right now. Dollar Swiss. Dollar Swiss, leave it alone. Dollar yen, part of my prediction. If we're staying below 107, which is, again, absolutely critical that we stay below it, right in here. So the next kind of push we have, as long as price is remaining below 107, I'm going to remain a seller on this dollar yen. Minimum target is 105, and if we slide into those March levels, we should be coming back into 101, and then that brings in the round number at 100, depending on that momentum. So that's the currency market. What am I doing with stocks? I'm waiting. Okay, a lot of the stocks I'm interested in trading. I'm going to take a page out of Warren Buffett's call from last week, which is stay out of airlines. Here's Delta Airlines that I've been watching. We're back to lows. It is very enticing to buy at 21.80, but look at how this was reset. I had a handful of people contact me last week and say, hey, is it time to buy airline stocks? Look at that recovery. I said, what are they recovering on? Sentiment? I mean, there's no real reason for airlines to be all of a sudden booming. It's like oil's making a necessary comeback, but having a 80 to 90% contraction in airlines, you're not seeing all of a sudden everyone rushing to go travel again. So I just thought it was a little preemptive, maybe a little bit more rally on sentiment, but you can see that was quickly faded. So we're back down to lows on one of the healthier airlines like Delta. So I'm just going to wait. Does Delta drift to 15 to 10? Can we buy it at bargain levels? Maybe. I would be interested in taking a stab at lower lows, but not right now. And that's kind of how I'm looking at a lot of stocks. I mean, I have a huge watch list here of stocks that I'm watching that I'm very interested in looking to buy as long as we are coming back to revisit some of those March lows or go lower. I'm going to be buying at the best possible price and try to set me up on some positions for the next 3 to 5 years. I don't plan on trading stocks for the bottom to make 20%. I want to buy and never look back and hopefully have that be a 50, 60, 100+% gain, because if the stock is losing from this high at 60 down to 10, I mean, it's losing like 90% of its value. So if we're buying those bargain levels, I mean, does it ever get back to those levels over the next decade? Maybe. Is that worth, averaging 10% a year gains over the course of a 10-year investment? Possibly. I mean, that's what investing is for me, at least in stocks. I'm a value investor. I look for lows and I want to buy and hold. Over March, yeah, was I buying and offloading at 20 to 40% gains? Yeah, I was. But I'm looking at the reality of those March lows. So there's a lot of stocks that I'm interested in, a lot of healthy companies that I'm interested in buying. I just want to see how one slide in March is possibly enough structure to set that up for these stocks to be revisiting them. And so for the general question of what to do with your stock portfolio, I would say wait. Look for the levels of March to be revisited. Look for the levels of March to be revisited and possibly go lower. If that is a price you can wrap your head around buying at, then buy it and hold it. If you want to try to pick the bottom, then those March lows will probably be close or maybe another 10, 20% lower, and you buy it lower and you hold. There are obviously more sophisticated ways to do it. You can trade options. You can hold it out for the next 30, 60 days and say that price is not going to go above a certain level or below a certain level. But right now, like I said, in stocks, I'm still waiting. All of this May uncertainty that we're just kicking off, I think it's sell and may go away. So depending on what this looks like over the next week, I mean, this is kind of my outlook for this week. Are we going to see more of this? Indecision, choppiness, volatility, right? Where there's not direction, but there's volatility. This to me would set up for a sell trade. And maybe it's not in May. Maybe the market's trying to tell you like, oh, it's not sell in May, go away, but instead it's sell in August. sell the election. I don't know. I mean, it may not be now, but that's why we have to be patient. So the setup is this. If we break below the April 20th low, I'm selling. If we stay up here, we just stay drifting, fine. Then I will brace for lower volatility. I'll brace for more indecision, and I'll take advantage of that. I'll be waiting in stocks, and I'll be trading ranges and tight, low volatility in the currency market. So that's going to do it for this weekly outlook, May the 4th through May the 8th, and May the 4th/force be with the markets to give us some clear direction. I think that we will have either more indecision here that will lead to a sell-off. And my big question that I've asked several times in these weekly outlooks is, if you had March to trade all over again, how would you do it? What instruments would you trade to be profitable? I'm glad that I'm a Forex trader for that reason. There are so many profitable opportunities in the Forex market because you can capitalize on risk off, you can capitalize on risk on. So this, April recovery versus the March slide. I mean, Forex was an incredibly volatile market in March, and it was incredibly nice and balanced and recovering in April. So Forex is always a great technical market to trade. In stocks, you have bargain prices that offered, anywhere from 20, 50 to sometimes 100% bottoms. That if you bought off the lows in middle of March, you had some great short-term gains that I think traders probably were taking profits on. But that balance is here. So now we're looking at this indecision in the stock market. Let's see where it goes. But be positioned accordingly. All right. So that's going to do it for me. If you're following me out there on social media, again, let me know how I can help. So I am here on Instagram. I'm actually posting a lot of these videos now. I post the full link on my YouTube channel. So just go to youtube.com, type in my name, subscribe to my channel, click on the like notifications so videos like this and more will pop up. You get those notifications. Also on Instagram, I've actually been posting these full videos on Instagram TV. So I'm trying to get everybody, the best place to find me is going to be on YouTube. I'm trying to build up my YouTube channel with all videos and free education, but, same thing, Instagram TV is totally fine. And who can resist the cuteness of Baby Yoda? So May the 4th be with you, everybody, and May the 4th be with the markets this week. Let's have a great week. Looking forward to trading with everybody. If you have any questions, feel free to reach out. Here I am, Instagram, Twitter, Facebook, and YouTube. And again, the best way to follow me is follow me on YouTube. Subscribe to my channel. That's going to be where most of my content is housed. All my free education, all my updates, stuff like that will come on YouTube. So see you soon, everybody. Have a good week. Talk to you soon. Bye.